We are going to be talking about his investment journey in the St. Louis market. We're going to talk about how he has scaled his portfolio to over $1.7 million in just a few years. And we're going to go into some very tactical steps today, including how does he look up rents? How does he look up the crime score for an area? And then we're going to go through actual examples of some of his properties, what their purchase prices are, rehab numbers are, all the nitty gritty details that you will want to know so that you might not be as afraid anymore when you're getting started in affordable housing. Um, Andre was also able to share a lot of good screening tips with us on how he goes about his screening process for his residents on his Section 8 properties. And we're going to get right into the details here. So I'm really excited for this conversation today, guys. Make sure you tune in and you stay throughout the entire conversation. And please subscribe to our podcast on youtube.com/ at Kent_HE, or you can also find us on Apple Podcasts. If you're there, please leave us a 5-star review because we could really use the support. And don't forget to share this podcast with people that you think might want to help other folks through affordable housing. Let's get into the highlights and let's get into the conversation.
I found this tool called TopHap. Again, this is not enough sponsorship, but I wanted a quick.
That's TOPHAP.com.
Yes, TopHap. So they have this crime index score that represents good versus bad. So 100 is the national average, and then 1100 is like a war zone, right? So it goes from 1 all the way to 1100.
Hey, welcome to another episode of Affordable Housing and Real Estate Investing. Today, I got my guy, a returning guest, one of the first returning guests ever on this podcast, André. If you haven't seen his old podcast with me on about a year ago now, definitely check that out because we talked a lot about how to screen tenants. But now I'm bringing back André to really talk about how much his portfolio has grown and what he has learned and how he has really succeeded at even another level in the St. Louis market. So without further ado, André, for the people that don't know you from last year's podcast, why don't you tell us a little bit about yourself and how'd you even get started in affordable housing, man?
Awesome. Well, thanks, Kent, for having me back. A year ago, I was on the podcast and I had just acquired and put tenants into my first 3 properties, right? So it was a baby at the time. I now have 16 units, right? I now got a credit line. I now got a system working on the ground. And the way I got started was, essentially 10 years ago, right? I'm working minimum wage, no degree. My family came from the Section 8 world, so I knew, and government assistance. So I knew what all those programs and social programs were about. And so I was just I started working, and somehow from selling cell phones at the mall kiosk to now I sell global technology to the Fortune 100. And what I started doing was, I started looking at ways where I could start giving back and also investing so that I don't have to work this hard, right? To go from selling cell phones to, selling global technology to the Fortune 100, it's a grind that, we could talk about another day. But to have done this with no degree, I know that I can't work this hard for a long period of time. So I started looking at other ways that I could get into real estate or stock. I was looking at stocks. I was looking at investing in assisted living homes. I actually acquired 4 Airbnb rentals and did rental arbitrage, right? So I tried everything and I essentially settled on Section 8 because of the low cost, the entry level to get in there. And then also I think that these tenants in this market are not focused on or cared for. And the way I look at it is I take that personal from the standpoint of even Section 8 tenants deserve quality housing because that's how I grew up, right? So that's kind of how I got started, taking the plunge about 2 years ago, and then speaking to you a year ago when I had 3 properties at the time.
Yeah, man. And I think this is the coolest part where I really wanted to bring on investors from all aspects, right? Single family, mom and pop landlords, and also ground up construction new developers, because I think everybody's journey is so different.
Mm-hmm.
And for the audiences listening right now, you can just look at how much Andre has grown. He's gone from, I think you said 16 properties. Did I catch that correctly?
Yes, 16
from
properties.
3 last year to 16 in a year. That is an amazing progress. And well, let's talk about how did you grow so much in a year, man? So tell us just a little about your portfolio at a high level, like what's the market value look like for all
Yep.
16 properties,
Yep.
and how did you grow it so fast, man?
Yep. So it's worth I just got them all appraised a month ago because I just refinanced, but it's worth 1.7 and 1,700,000 and 25,000. So let's just call it 1.7, right? And it's 16 properties. And the way I grew fast, I'll be honest with you, Kent, I've been doing really great at work. And so I've been saving my commissions. I live very frugally, I would say. Paid off car, right? No designer things, right? Cheap phone. I mean, I'm that guy, right? And just put it all into real estate, right? So I tested out with 3, or really with 4, and then once I refinanced and just figured it all out, I then just went all in. I bought an 8 package portfolio, so I bought 8 at one time, so that got me to 12. Then I bought
Wow.
2, and then I bought another 2. So now I'm buying portfolios. I'm buying multiple at once now. Additionally, I just got approved now for a $750,000 credit line with a hard money lender. And so I'm now learning how, that essentially allows me to buy about 7 or 8 properties at once now, fix them up, rehab them, so on and so forth. But yeah, that's really how I built.
Well, let me pause you there.
Yeah.
You said something about I saved all my commissions, and you essentially just bootstrapped it because you don't have any partners, right, on these properties.
No
And
partners.
I can't emphasize this enough with people where everybody always says, I want to quit my W2 job as soon as possible. And it's really more like a superpower. If you really think about what Andre has just done, and he has led by example on doing, is he's saved all his commissions from his sales job. He's crushing it. But this is one of the traits that you want to see in a successful real estate investor. One who's managing their finances properly, who's living a frugal life with delayed gratification,
Yep.
and then also learning how to use his W2 income to get more credit for future properties. And that's how you were able to scale so fast, man. Well, dude, I commend you on your strategy, your discipline, because I know it wasn't hard to stay away from those designer things as you got to
man.
$1.7 million portfolio.
I have been looking at some sports cars. Yeah, I have been looking at some dream sports cars, but I haven't pulled the trigger just yet, right? But to your point, right? Living frugally, right? Delayed gratification, all of those things, right? It really played a factor. And what I've learned is, with having W2 income, it is very easy to get approved for a loan. Now, the way I look at it is I tell people, if you can afford a car payment, you can afford an investment payment, right? The average, my average payment, right? So I read a stat that said the average car payment is $700 now in America, right? So the average payment of a house I buy is around $500 after the down payment and everything. So if you can afford $700 a month for a car, you can afford $500 a month for an investment property, right? That's kind of the way the math works.
Right. Well, there you go. Like $500. I mean, it's a trade-off, right? Do you want a fancy car that's depreciating, or you want a house that's paying off by itself and appreciating, right?
Correct.
Common sense, guys. But I get that sometimes you need a car to get to your jobs. Yeah. That's okay. But for the people that are wondering, hey, there are no more deals out there. Interest rates have gone too high. I can't get a deal. Yes. Andre, tell us just about a recent deal you've done.
Oh my gosh.
Let's go through the status, right? I want to know the purchase price, like when approximately you bought it, the rehab, actuals, length, ARV, and the cash flow after the refinance, if you did one. Let's talk about it.
So is it cool if I shared my screen, or is that not allowed?
You can share your screen for sure. Pull it up.
Yeah, let me.
Yeah, and for the audience that are listening in their cars, feel free to check us out at youtube.com/@Kent_HE on YouTube, because I do want you to see some examples of what Andre is able to share for us. Andre, it probably,
oh no, I'm ready. I just want to.
There we go. Go for it.
You're speaking.
There we go. Go for it. So go ahead and share it.
This is a great question. What I've learned is that in this market, in Section 8, we're talking sub $100,000 homes. The interest rate does not matter as much. It's the difference between a 3% interest rate or a 7% interest rate. It's really the difference between $100 a month.
Great perspective.
Right? So, I'm sorry?
Great perspective there.
Yeah, I'm going to show you exactly what I did. This is a software I like to use, and then I show like some advanced stuff in my course on how to operate with this. But this is a property I bought, as you
And
can
just for the
tell.
people listening on the podcast, right? You're using a software called Privy. Am I looking at it
Privy.
correctly? Okay.
Yes, correct, Privy. And this is publicly available information that you can find for free. But for me, I pay for speed. They put all the data together for you, and I'm able to sift through it instead of looking through the county records and blah 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 blah. Right. So I think this is not an ad, but I think it's like $90 a month or so. But it just saves me a ton of time. So I'm going to show you what I did when I bought this property. So as you can see here, when I bought this property, I bought it for $70K, right? I don't know if you're able to see the screen. Does it show the line?
Yeah, I can see the line. It's a 70K. You might want to zoom in just a little bit,
Okay.
just in case for people that. There you go.
All right. So 70K. And when I looked at the distance to the other properties that have sold, right, it's just showing up the closest comps. I'm looking at properties 136, 130, 121, right? 67. This one I remember seeing this, and okay, it's 67, but it was ran down, right? So I clearly saw this is being sold for 70K. This is 1,300 square feet, right? As you can see, similar lot, similar everything, right? So when I saw it, I said, oh gosh, this property doesn't look like it needs a ton of work. So these were the actual property, these are the actual videos, or if you can, I'm sifting through here. I said, oh, so this is instantly worth whatever, it's certainly worth over 100K. Now, I then pulled an inspection. I purchased it. So let me tell you what I purchased for. It was 70K. I put 20% down, which I think was around 14K. My loan was 56,000. Taxes, insurance, everything. I was all in at 535. And with a 56K balance, right? At 7% interest. And so the market rent on this is $1,200. 3-bedroom in this area, $1,200 on Section 8. So I knew that I'd be cash flowing at least $600 to $700 after property management.
Wow.
Right?
All right.
So what I did is, now once I'd had the inspection done, we did find out that there was a roofing issue that costed $2,200. That there was an HVAC issue. I think that was around $1,500. I needed to paint it. Basically, my budget to fix this up was around $10,000.
Got it. And Andre, let me just pause you really quick so everyone's following. So you found this property on the MLS, right? Just like regular on the market.
Correct.
Okay.
Zillow.
And how did you get alerted to it? Were you just setting up alerts? Did you have a realtor that's working for you?
Yeah, I do have a realtor. I have a team on the ground, so I have a realtor. But I actually go on Zillow and I just put my criteria, which is under 100,000 and 3 bedrooms or more, is what I focus on. That's simple. And I literally look at every property.
Got it. And I want everyone to kind of follow what he has done, right? He's got relationships with the realtor. He's setting up the alerts so that he establishes a criteria for what he knows might possibly be a deal. And he is looking up all the ARV of the surrounding properties, which gives him the best chances at getting back or taking out all, if not at least some, of the capital that he has invested into the property so that he can actually recycle the cash that he just poured into this investment into the next deal. So thanks for letting me pause you. I just want to make sure I'm catching up all the audience to it.
Yes. So I think, like I said, 14K down. For closing, I got a $2,000 credit because the roof was messed up. You can't tell in this photo, but you see there's a blue little tarp right here.
Interesting.
Yeah. So again, all this came out when I did the inspection, which, I have a guy that's my inspection guy. Cost me around $250 for him to take an in-depth look at all the major appliances and, the roof, the HVAC. And so I looked at this and said, well, this is at least 100K property, and 10K or less, I got a 2K credit at closing, and so on and so forth. Now, what was an additional bonus is it says 3 beds, 1 bath, but they were actually using one of the bedrooms as like a pool bedroom, they had their pool. It was like a den or something. So this actually was a 4-bedroom. And so let me see here if I can see the, so this is actually a 4th bedroom that they were using as like a pool, like studio thing.
Game room. Interesting.
Yes, exactly. And so I said, holy cow, I'm sitting on a gold mine, because remember, Section 8 pays more for the amount of bedrooms that you have. So I'm not looking at 1,200 a month now. I'm looking at 1,400 a month now, right? And so obviously that's great for a DSCR loan, right? Or just in general, right? More cash flow, the better. And so that popped up after the inspection. I said, I gotta have this property, even though it does need 10K of work. Like the entire fence was broken in the back. So I had to get, somebody to fix the fence. There was just a lot of little knick-knack stuff. I repainted everything. And so, yeah, but as you can tell, this property looks like it could almost be rent ready, right? Like right now, right? So I just went in there and made it a little bit nicer.
Got it. And what was your total rehab on this property then?
So it came in at 11,000.
Okay.
Now,
so roughly around 14K down, 11,000 for rehab. So you're
11,000.
on around 25,000 down.
Yeah, exactly. However, this was my first time doing this and I was inexperienced. And I went through my property management company to do all the repairs. And that was not a good idea because one, it was double the price than if I would have just had my own person. And then two, the property management company doesn't necessarily have everything in-house. So they were actually contracting. So anything I needed, so the fence, they send it to a fence company, right? The roof, they send it to a roof company, or the paint. I'd rather just have one guy or handyman that can do it all for me. And that's that's what I have on my team. But when I first did this one, this rehab should have been 6K, but I ended up spending 11K though.
Interesting. Yes, yes, it does.
But the thing though is this is my first time doing it, right? You got to take the leap and learn, right? And so if I didn't take that leap, I would have never figured this out, right? But that was one of the mistakes I made, was doing this rehab through the property management. What I do now is for all rehabs, I actually have my trusted handyman contractor that does everything for me very quick and for just the best cost.
Got it. So even though you paid an extra $5,000, how long did the renovation take for this property?
So, you know what? It actually took about 2 to 3 months, which is absolutely ridiculous. And again, that's because they're contracting out to everybody. Not everybody was available. Somebody, they needed to take pictures. We sent multiple quotes to do this job. It was just not the greatest process, and it took 2 to 3 months. Now I get everything done in 1 to 2 weeks, even heavier.
Wow.
Yes. But again, this was my first one doing this, right? And so essentially all that went into it. I refinanced in June and the property appraised at 115.
Let's go.
So appraised at 115. Now check this out. My lender gave me a 6.5% interest on the refi because I did a 30-year loan, but a 10-year ARM. Now I'm going to
explain what a 10-year ARM is.
A 10-year ARM is in 10 years, the interest rate can reset to the new prime rate, whatever it may be, right? And so that scared the hell out of me because, the 2008 financial crisis or whatever, right? However, I read the fine print, and what it basically is saying, if in the worst case scenario, the interest rates are astronomical, though they limit how high your interest rate can go, which the highest my interest rate can go is 11.5% in 10 years. Now, even at 11.5% with today's rent that I got on this property, I'm still cash flowing $60. So my standpoint was, well, I'm obviously going to raise rents over the course of 10 years. And if the worst case scenario happens, I'm still cash flowing even at today's market price, right? So even at today's rent. So I said I was willing to do the 10-year ARM, and that's where doing 10-year ARMs or higher interest on these type of sub 100K properties, there's really not a ton of risk. Does that make sense?
Oh yeah, I mean, just so the audience really understands everything that's going on right now, Andre not only has thought about the worst case scenario, but he calculated what the worst case scenario might look like. So for all the folks out there that are so scared of taking action, like, you might have heard that Andre just spent $5,000 more for the rehab versus if he would have done it himself. To me, think about use this as an analogy. You probably
Mhm.
spend about $40,000, 50, maybe even $60,000, $70,000 a year now on college.
Mhm.
That's tuition. In my
Yes.
opinion, Andre paid $5,000 for tuition
Mhm.
and learned, and he also built out a team in interim. For me, that's a much, much more valuable education that he learned, that he experienced, and now he's willing to share this value with the audience that's listening to this right now. How great is that? You guys just got at the minimum $5,000 of value just by listening to what Andre has said.
Yes.
If not, you probably got $115,000 piece of value just by listening to Andre and how he just executed this
Yes.
project. This
And
is so cool, man.
yeah, and check this out too. Now, by my property management firm sending all the jobs out, I then got introduced to the painter that did this house, is now my
Mm.
main contractor and everything for everything else now. He's the first off, he did the job so fast and the price was so good. I called him directly and said, "Who are you? You know, how did blah blah blah?" And he's like, "Oh no, I have my own company. I've got 20 employees. So if you need more things, I can do everything." And I said, "What?" And now he's my main contractor.
And
That
that's all it is,
and
guys. That's all it
it
is.
took an investment. I overspent 5K, right, on this, but look at what I got now, right? Look at what I received. A trusted handyman that has done 3 more rehabs for me since then.
And for me, guys, like I would pay $5,000 to get access to the best of the best people. This is why you invest sometimes when you might not need a realtor. You might not need someone to coordinate your entire rehab, but somehow, some way, Andre stumbled into an all-star team. And I think
Yes,
that's what's going to allow you to truly succeed in whatever market you're in, because even the most seasoned investors, they all have this problem. It's about
yes,
finding the reliable people that are responsive and they just do what they say that they were going to do. And sometimes that is just so hard in of itself to find a team like that. So, Andre, you have seemed to have established and created an all-star team. But let's wrap up this deal
okay, yeah,
because
yeah. Sorry, yeah,
got to refinance. What's your cash
yeah.
flow looking like
Okay,
after the
gotcha.
refi?
So going into the deal, my first loan, right, when I bought it for 70K, we were looking at 535 a month, and I was looking at around 1,200 in cash flow, right, or 1,200 a month, in terms of the rent for the 3-bedroom. Come to find out, it's a 4-bedroom, so I'm started getting 1,380 instead of 1,200. And when I refinanced it, my mortgage went up to 740, so 741. So 1380 minus 741. So what is that? 639 minus $100 for the property management fee. So it's 539 cash flow. And remember, I refinanced it. So at 115, my lender did a 75-25 cash out refi. So cash to me was 86,250, and I had to pay off the old loan, which I owed a balance of 56,000. So it was exactly $30,000 cash back to me, and I'm still cash flowing 539 per month.
So you got back all your capital, maybe plus minus 5 grand,
5K
and you're still making $535.
cash flow.
Uh, Dude, what a great deal. Way to
Yes,
go, man. Congratulations on this
yes,
one. Let me remove
yes.
this one, but congratulations on this deal. Thanks for taking us through real numbers because, man, sometimes people just need those tactical steps to really
Yep,
understand, like, how do I take action on this? Like, stop telling me I can do this. Stop telling me I just let me
yep,
see here some numbers. So
yes.
thank you for being so open and transparent with
Mhm.
those details. But so now that you showed us the deal, people are now interested. Like, okay, how do I become like Andre?
Yeah.
You're in the St. Louis market.
Yep.
Where should people invest in St. Louis?
So that's a great question. It really depends on what you're trying to do. So for me, what I looked at were, I want to spend the least amount of money and get the highest return. Right? I'm a cash on cash based investor. A lot of people play the appreciation game, or a lot of people do multifamily. I'm like, how little money can I spend to make the most cash? And so I found that Section 8 rentals in St. Louis we're well exceeding the 1% rule. Are you familiar with the 1% rule?
I
So,
am, but for the audience that don't
okay.
know, why don't you explain that?
So if you're buying a property for $100,000, it needs to rent for at least 1% of the purchase price, meaning at least if it's a $100,000 home, at least 1,000 per month, right?
Hmm.
So now what I started finding out was with interest rates going higher, that 1% rule is kind of getting a little squeezed. but I started finding 2% deals for 75K, 4 bedrooms that are renting for 1,400, right? So for me, the highest cash return is what I'm looking for, right? And so for that, I then found a pocket in St. Louis. If you look at the city, you'll see, there's the city in the middle, and essentially what they call North County is where I focus. So from Jennings above all the way to above the airport is what's called North County. And so those are the areas where you're going to find 70 to 80K, 90K homes that are renting for 12, 13, 1,400. And so that's my focus. And I think, if that's a strategy that you like, certainly you could do it as well. So, but yeah,
Well,
in terms of, yeah.
Well, you showed me something called you evaluate crime scores, right? Because I think
Yes.
we've read enough books in the past was like, hey, there's the 1% rule. This doesn't really exist. 2% rule, that sounds too good to be true.
Yeah.
And some investors will say, well, there must be a reason why. There must be a reason why. So help us explain, how do you mitigate the risk through
That's a great
some
question.
potentially bad areas?
That's actually a great question. So my first 5 properties, I just bought willy-nilly. No crime data. I just went off of, I'd ask my realtor, hey, is this good or no? Right. And that's not to create a nice scalable business. That's not reliable enough. I come from the tech world. I need data and science. How can I quickly analyze what, a good area versus a bad area? My 2 properties out of my 16, the 2 I bought just willy-nilly, are doing terrible because they're in the worst area. I'm I'm having trouble with finding tenants sometimes, and then there's no appreciation on those 2 properties because of the crime. So I will take you, and this is again, I'm going to include this in my course, right? A more in-depth analysis, but I'm going to show you another tool that I use.
Got it. And I think this is why people would like this episode so much, because I know that, one, you just talked about a slamming deal.
Yeah.
But now you're also talking about a deal that you didn't do so well. And I think this is the hard truth that people really need to understand, because this is why you listen to Andre.
Yes.
He's willing to share even the bad deals that he has done. And when we talk about terrible, I'm assuming you mean high vacancy, no cash flow, because it's an area that's hard to fill. Am I stating that back correctly to you?
Yes,
Okay.
yes. So I'll tell you what's good and what's bad. I'm going to show you.
All right, go for it.
Yep. Okay. So I found this tool called TopHap. Again, this is not enough sponsorship, but I wanted a quick.
That's TOPHAP.com.
Yes, TopHap. So they have this crime index score that represents good versus bad. So 100 is the national average, and then 1100 is like a war zone, right? So it goes from 1 all the way to 1100. And so I started saying, okay, I started looking at my properties. This one I showed you was a 361 here, right? And then I said, what does that mean, right? And then I started looking at where I live. So my reference point was, where do I live? And where I live is very safe, and I like it. And let me see what the crime score is where I live. And I looked at it, and I live in a 400 crime zone. And I was like, holy cow. And here I think 361 here I think 361 is a lot, but it really means it's a good score, right? Now, so this is what I use. I don't go above 400. And now I'm going to show you what a terrible property looks like.
Okay, so that's good. So you have your own frame of reference on where you live personally. And I think always, that's a great example for people where, especially you live in a metropolitan, in a downtown area, chances are you're in a denser population. So crime scores might sometimes be skewed towards higher because there is just naturally more population in the area. So that's a really good way for you to kind of base it.
Correct. So now when I look at a 361 property, look at this neighborhood. Do you see this? Like, not only it's just a suburban area. This is what my tenants want. This is what a Section 8 tenant wants. They want their own place in a nice area. You see how this area is, you see how it looks?
And just for the people looking, that might just be listening, what I typically look for is just like, hey, are there any signs of boarded up homes?
Boarded
Are
up
there a lot
homes.
of trash on the streets
Correct.
and look abandonment? And right now, we're just seeing well maintained lawns on the
Exactly.
screen right now.
And this is not only I also visited, and it even looks nicer when I visited. So remember, Google Maps gives it to you like raw, right? And so if it looks like this on Google Maps, you could just imagine, right, when you actually show up, it's actually in a nicer condition than what you see. So this is what a 361, looks like, right, in terms of a crime score. Now, my worst property I'm going to show you, right, and now as you can tell, this one's in a 900 zone.
Okay, that sounds a little bit worse for
Yeah, yeah,
sure.
yeah, yeah. So what this means is that crime in this area is 9 times the national average, because the national average is 100, right?
I see. Got it.
And then now I'm going to show you what that neighborhood looks like, right? So so it doesn't look too bad looking at it like this, right? It doesn't look too bad. You go here, you're by train tracks, right? Which is these are train tracks. Let me go to the
Interesting.
major street. Look at how bare this is. You've got warehouses that are boarded up. Not just homes, but warehouses. Do you see this?
Oh, interesting.
Yes.
Interesting.
Yes. Then I was like, okay, let me get to the closest area where there's like food and stuff like that. Right. So let me take you to the closest like commerce here, a laundromat. Right. Then you got a boarded up Popeyes here. Right. And it just looks unlively. This is boarded up as well over here. See these like random businesses here.
Ah, I see. Yeah,
So,
so sometimes
so
like boarded up things. I mean, I've seen in areas in Detroit where
yeah,
if a fix and flipper is renovating a property, they might board up the windows to make sure there's no squatters
yeah,
that gets in. But when you see so many signs of boarded up businesses,
yes.
like
So
that's generally not advisable.
right. So you can see, look at this, right? Just and then I drove by and I was like, oh, now I see why no one wants to live in this area or why it's hard to find people. Look at you just can't nothing, nothing's a dollar store, but it looks rural, but this is a metropolitan, right? This is a metropolitan city. So that's what a 900 looks like. And so this helps me in instant find out what I can do, what I shouldn't do. Is that fair?
Yeah, and I think this is a great strategy, right? Now Andre has shown us a tool that he uses personally for
Yep.
his properties that he uses as the criteria to determine, do I want to buy here, do I not want to buy here?
Correct.
So that's a great tool. How about estimating rents,
Okay.
Andre?
So
How much can people expect to collect for
yes.
rents for a 3 or 4 bedroom property in St. Louis? How can people, what are they? And then how can people find out for themselves?
Yeah. So I don't know if is the screen still sharing?
Yep, it's back.
Perfect. So I just type Google HUD FMR. I go to fair market rents. I go, oh, we're already in 2024. So I click 2024. You're going to go to Missouri. And then I already know it's in St. Louis City and St. Louis County. So that's St. Louis City and St. Louis County. It's the exact same. So it doesn't matter for Missouri. So as you can see here, when I bought this property, it set around $999 for a 2 bedroom, right? So you can get 90% of this fair market rent.
Whoa, that's a big jump there, guys. And just in case people don't see, it went from 999 for a 2 bedroom in 2023 to now 1209. That's a significant jump.
This is no, the rents are exploding, right? So a property I bought for 98,000, 1 year later appraised for 140. I didn't even do anything to it, and I was able to refinance it. So rents are exploding here. And I would assume property values too, but now I've got a little system here. But yeah, this is what I was purchasing on when I purchased it. I was looking at 2023; it was 900, and so typically you're going to get around 90% of the fair market rent. So 900 would be this property was I bought it for 46,000, and it rents for 850 right now. So that 2 bedroom that I showed you, the terrible one. So
Yeah,
I'm
but
still cash flowing on it. It's just not a good property. My mortgage on it is 308. So but it's just not a good property.
and we're recording this for the listeners that might be listening to this in the future. We're recording this in October 2023 with the 2024 rents that just come out. Like 3-bedroom property in 2023 was renting for $12.94 as a ceiling, right? Like Andre just said, you probably typically get about 90% of that. But
Yes.
that rent for a 3-bedroom just went up to 1565, which is the new ceiling.
Yes.
That is 20% increase in your rents. And this is for
Exactly.
affordable housing. Section 8, typically the government will pay on time every single month. There
Yes.
is a outsized opportunity here now, guys. So please,
And
please, please pay
and
attention.
I'm getting, my $1,400, 4 bedrooms. I just got approved for another 120 increase, right? So my 4 bedrooms are for the 4 bedroom properties go like hotcakes because there's not a lot of 4 bedrooms and there's so many 4 bedroom vouchers in this market. So I love getting 4 bedrooms because it's the best bang for your buck. They're just hard to find. I've got about 4 bedrooms out of my 16. And so I have 1 2 bedroom and the rest are all 3 bedrooms. So, but yeah, yeah. So this is how you estimate what you're going to get.
And this applies across the entire county. Well, Andre, for the people that says like, hey, this sounds too good to be true, still, after looking at all of these items,
Yeah.
what has been your experience getting rent increases for your properties? Has
Zero
they been
hesitation.
pretty amenable?
Yeah. There's not even a negotiation I just get it. There's not even, it's just, you have to, the main thing is you have to submit to get the rent increase 60 days before the lease is up. So anywhere between
Mm.
2 to 4 months before the lease is up is the time frame to get it. And I've done it twice, and I just haven't gotten any opposition, and it just goes up. They just give you a rent
So you just submit a rent increase
form.
request, I'm guessing. Okay, form.
It takes it took me like 3. It just says I'm the landlord. Here's my email. Here's the ownership paperwork that I own it. Please increase the rent. And then they ask you for what you want. And honestly, I've gotten every rent increase I wanted. And I'm like, man, I should have, like, they say when you get what you want in negotiation, you didn't negotiate enough, right? So I wish I would have put the number super high that they would have came back, right, at a lower number. But
Well, do you put your rent increase number as the same as what we see here on the screen for
you
the
know what I
FMR on the
did?
website?
So one of my 4 bedrooms is getting 1330, and I put in a request for 1450, right?
Mm.
And they just gave it to me within 5 minutes. And I'm like, damn it, I should have asked for 1600 and maybe they would have came back with 1500, right? But yeah, I got 1450 on a 4 bedroom. But
And
it went into effect last month. So I don't think
got it.
2024 was out yet.
Yeah,
So
this is pretty new. This is the first time I
yeah,
saw it just like last week. So
yeah.
this makes a lot of sense.
So at that time, I was negotiating against 1512 ceiling, right? So I was like, 90% of this is probably 1400-ish. Let me just do 1450, right?
Yeah.
I did not know it's 1818. I would have put 1818
Yeah.
on the
But now, guys, this is a great, great example of, we just talked about how scary it was to get a 10-year ARM with a floating rate. But remember, Andre did the worst case scenario, and this just shows you how the rent gone up $300 for a 4-bedroom property.
Yep.
Now, this probably won't happen every single year, but this is what's in front of us right now. And right now, there might be a really good opportunity here in St. Louis.
Yep.
So this is awesome. Thank you so much for sharing those details, because I think that's what's really important for people to figure out. Like, hey, how do I do this? How complex is it dealing with the local housing authority? Is it only one housing authority that has worked with you?
That's a great question. There's 2 housing authorities, St. Louis City and St. Louis County. There's also a couple smaller organizations that are like for domestic abuse victims. So they do have that, but I haven't had any of those tenants. I've only had St. Louis City, St. Louis County. So when you post the property and someone applies to your property, you don't know what housing authority it is until you get their voucher from them. And then I definitely prefer one over the other just due to response times and things like that. But working with them it's pretty straightforward. The issue that I think a lot of people have is that they don't answer or respond in quick time frames. Now, I'm a professional seller, right? I sell, I do sales and outreach and cold calls and stuff. So for me, it is nothing to keep bugging, keep emailing. I have a cadence. I know how to do it. And I think what people get frustrated with is they didn't respond or this, but they don't know that it's a game, right? And you just continue contacting, continue following up, so on and so forth. And then I've built relationships with some of the housing folks, right? So when I need something done or things have came up, I know who to reach out to and things like that. So yeah, it's getting, the process is getting better, but it definitely was the hardest to start.
Got it. And because the residents or tenants, they might have a voucher from either the St. Louis City Housing Authority or the St. Louis County
Mhm.
Housing Authority. They still qualify for a rental in whatever areas that you're investing in
Yeah,
currently, right?
right,
Okay.
right, right.
Go ahead. That's super clear. So we already talked about acquisition strategy. Let's just talk a little bit more about how you built your team, because you mentioned earlier that you built your team by one, finding the painter who
Mhm.
did your prior rehab. How did you find your current property manager?
So actually, I'm still in. I've got 3 property managers, right? And yeah, it is not recommended, guys. It's not
Interesting.
recommended. I like what one does. I don't like what the other does. The other, the third property management company, they were already managing the 8 properties I acquired. And so they had intimate details of those properties. And because I didn't absolutely love my other 2, I was like, you know what? Let me just test and see who's got what. And that actually strategy has helped me out because yeah, I don't love what's going on with the property managers. They don't, yeah, maybe that's a conversation for another day, but I do have 3 different property managers.
Got it. And then for the audience out there right now, like, let's just keep it positive. What have
Yeah,
you enjoyed and liked the most from your property managers? What are some of
so,
your hints of great best practices or great management style,
yeah, yeah.
etc.?
Okay, great question. So I wouldn't say I hate them or anything like that. Let's just keep it positive. What I love, what I noticed that is the best thing about a property management company is you want a property management company that has their in-house maintenance techs, in-house people. I've learned that my costs were skyrocketing because that property management company was outsourcing every job, and it creates a gap. So I really look for property management companies that have their own maintenance techs in-house because it's cheaper, more reliable, so on and so forth. So that's for those out there. You want to ask your property management company, do you have in-house maintenance techs? Very key, very key. Um, and yeah, so that's the main thing I look for. But what I do enjoy about them is I used to manage my own Airbnb rentals, and getting calls at Saturday at 1 a.m. Because they forgot their ID at the club and they need access to get into the property or whatever. I really enjoy that. I don't get any phone calls from tenants. It's I get to just focus on strategy and rehabbing or something like that, but I don't have to deal with the day to day. And for those out there, like a lot of people are like, how do you not manage your own properties and do it all yourself? It's like, no, I love paying the property management company to not deal
Hmm.
with that, not deal with taking cash or just them paying their rents. Also, I have filed for evictions and they do that process for me as well.
Great.
Also, you want to ask, do they have an in-house lawyer
Mm.
that they have to do the evictions for? Because again, the company that outsources, it's double the cost. Instead of 350, it's 550,
Wow.
and
Okay.
then you don't have oversight. You can't talk to them as directly, right? Because it's not in-house, right?
Got it.
So that's another thing. But yeah, I would say I love not having to deal with the eviction process manually. I just
Hmm.
say, hey, this person's 2 months late, filed the eviction, and then they do it.
Yeah.
So
So we just had a gentleman named Dr. Joe Azamoah on the podcast, and he talked a lot about how screening the tenants is such a crucial part of being a successful real estate investor. How involved are you with the screening process, and where do you have the oversight with your property management company?
this is great. This is absolutely great. You touched a good point. And I'm not trying to be negative, but I don't think the property managers, they're trying to fill the properties. They're not looking as intently as you. So I actually screen every tenant myself. And what I negotiated with the property management company, they typically want a first month's fee, right? To get the tenant, so on and so forth, move them in, blah, blah, blah. I told them in my contract that I signed with them, I'm going to screen all tenants and place them and not pay that fee. The only fee that I pay you is the $60 or $50 trip fee for when they go show the tenant the house and then move them in. So instead of paying them my whole first month, which is 1,300 or whatever I'm getting, I'm now only paying them 100 or 150 for the same work, and I'm screening so thoroughly and putting the best tenant in there, and I'm doing it way quicker than what the property management company would do it in their time frame, because they're managing multiple properties. So they're not.
Thank you for dropping that pro tip, man.
Yes,
Thank
yes,
you. Because not
yes,
only did you just save everybody like $1,000 or 1,200
yes,
bucks, but
yes,
now you're taking ownership of your properties to screen the tenants. Because
yes.
we learned from other real estate investors who have been successful in affordable housing, screening is so important,
It's
and you
the
don't want to leave that up
mhm.
to your property management company.
You don't, 'cause they just want to put the tenant in. It's not, and again, a lot of real estate investors would be like, oh, I just do this and then I send it all to the property management company. And it's like, I know you're not cash flowing or doing as well as you're doing if you had a little bit more oversight. And I negotiated that into my contract with the property management company. I said, I'm not paying you that fee. I'm going to just pay you whatever your trip fee is when you have to go to the property when we're placing the tenant, because I'm doing all the work. I'm
Mhm.
finding the tenant, I'm screening them, so on and so forth. I just need the boots, you to be the boots on the ground, and they're typically okay with that.
Got it. Well, Andre, let's talk about how you screen for your residents then, because this is so important. And for someone to be like, hey, how do I learn from Andre? Let's talk about what your screening process looks like. What are you looking for in terms of like minimum standards? And how do you identify what we call is like the tier one tenants?
Yeah, so the tier one tenants, I've only had, I would say I've had one tier one tenant, and they've been absolutely great. They had a credit score of 730. And I was like, oh, if I see a 700 credit score, I don't care what your life situation is, you're getting my property. But with Section 8 tenants, typically you're going to see under 600 credit scores, sometimes 400s even. But what I learned is, I look at their, I see if they have like a lot of past debt. A lot of it is student loans or medical debt or something like that. Some of these people are in collections and things for like $300, So I'm like, this is not somebody that's like frauding or taking $100,000 out, so on and so forth. So credit to me is the least important in terms of approving someone. The most important thing is evictions on their record and criminal convictions. So I look for stable income. I typically steer away from people that, a lot of Section 8 tenants are on like social SSI or social payments, or don't have jobs, right? But still have a voucher. I like someone that has a stable income, even if it's not a ton of money. But like you were a security guard for 5 years, right? So I typically look for someone that makes at least double the rent. So if it's 1,300, at 2,600, right? Like, and what I found out is income is a factor when you want to raise the rents, because you're not just raising the rent, because remember, the tenant's paying some portion. So if I'm going to raise the rent, the tenant has to be able to afford it. So if you take a tenant that doesn't have an income, you're likely not going to be able to raise the rent. I haven't faced that, but it is a factor. So getting someone with income to be able to raise rent, it is a factor. So I typically look for someone that has 2 times the rent, and then if their credit is under 600, instead of charging 1 month's rent deposit, which is typically around 1,200 or 1,300, I just raise it to 1,500. I mean, $1,500 deposit. So my pitch is everyone's approved. It just matters if you have a 1 month deposit or a $1,500 a month deposit.
Got it. No, that's really helpful that you went through all that criteria, because I really love that you rely on stable income, because one, it shows and demonstrates the resident or tenant is
Mhm.
actively trying to work and probably trying to improve and better their life
Yes.
to the best of their ability. And at the same time, it also opens up you to qualify your properties for rent increases, just because we know like, hey, a resident does not pay for X amount, more than X amount, or more than X percentage of what they make a
Mhm.
month. So just because you increase the rents by 300 bucks does not mean their portion goes up by 300 bucks a month. It
Correct.
does not. It does
Correct.
not. It might even say the same if they don't get a wage increase. So
Yeah.
I don't want anyone out there to think about like, oh, Andre's just trying to raise 300 bucks a month. No, it's disproportionate to how much they make whenever their rent increases, where
Right.
really the government might be taking on the brunt of that rent increase.
Correct.
So
Correct.
wanted to make sure I clarify that for folks that might not
Yes.
be understanding that.
It averages around, the government's paying around 75%, 75 to 80% is what they're paying, right? So when they raise the rent, obviously the tenant's going to pay a little bit more. And however that's calculated, I don't know, but it's calculated. So, but yeah, that's how I screen for my tenants.
Awesome. Love it. Andre, so you now have a great team. What type of rehabs are you typically looking for now? Are they just light rehabs, or have you built the confidence to go after heavy rehabs? Tell us where your mindset is on
Yes,
the
that's
rehab
a
scope.
great question. So now that I've got the guy and the team, my rehabs have gotten progressively more lengthy or more complex. I'm even looking at a house that was burned down right now, right? Yeah, yeah, So, but I haven't done that yet. I that will be a process for me afterwards. But now I'm doing complete new flooring, all new paint, uh, finishing the basement, new cabinets in the kitchen, remodeling the bathroom, installing new tubs. I mean, pretty much everything, but nothing like from the studs up, right? Like haven't taken it down to the studs and and done that kind of rehab. Just more like maybe as complex as a cosmetic rehab can get is what I've done. Um,
Got it.
and so right now I've got two that I'm rehabbing as we speak. My last two that I
Hmm.
acquired with my credit line. And those are a little bit more involved. So for example, the property has the old stay block electrical panel, which your insurance company is not going to insure you if it has that electric panel.
Oh,
Yeah,
interesting.
yeah. So I had to get that whole new electric panel and rewiring done throughout the house, right? So that's something I had to get done.
And how
Um,
much does that cost?
it was 2,500. It was
Okay,
2,500,
great.
which is not, but it's 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 a little bit more involved, right? I had to get them to do that first before I started the rehab, right? Because I didn't want faulty electrical wiring to be in there while I've got a team in there doing things, right? So those are the types of things you got to think about. But yeah, and then they're doing taking out the flooring, taking out the tile, new cabinets in the kitchen. I mean, just that kind of stuff. But I haven't done ground up or a property that has had a fire.
Hmm.
That will be next after the couple of these.
Okay, this is going to be great because we had a episode about the Lanza market, and they did really well from the episode standpoint because they were able to share some of the numbers of rehabs. Are you able to share like how much in general like a flooring job takes? Like, is it dollar per square foot for LVP? How much does it
Oh,
cost to paint certain things? Do you have any of those numbers off the top of your head that you can share with the audience?
yeah. So I would say so. Yes, that's a good question. So to do an entire house is typically around 7 to 8 rooms, right? Is how they like calculate it,
Mm.
and it's like 350 a room, right? Like to paint it. Then they'll charge you 400 a room if you need to do all the doors as well and the trim on the doors, right? So to paint an entire house, you're looking at like 3,000, right? Three to 3,500 or so. Um, yeah, yeah.
And that sounds about right because we're generally about like $3 a square foot where I've done some rehabs in the
Okay.
past, and you seem to be at like $1,000 square foot homes or maybe a little bit above that.
Yeah,
How
yeah,
about
yeah.
for flooring? What does
The
that typically
flame.
cost you guys to do
Yeah,
like
so
LVP
you
and
know
stuff
what?
like that?
My I do luxury vinyl plank, and I don't
Hmm.
know. I know I'm paying below market, but
There you
he's
go.
able to do a 1,000 square foot home for like 1,800, everything in.
Whoa!
Yeah, yeah,
What?
yes, yes, and I know that's cheap, but it's quality and it's cheap, and that's why I like the guy I have because he's like, and I don't mean this
Yeah.
disrespectfully, but like he's like from Brazil, choppy English, right? Just gets things done quick and cheap, but is also quality. So
Andre's got the plug. That's why your
yeah,
phone's
yeah,
gonna
yeah.
blow up after this,
I'm not giving
Andre.
my contractor out to anybody because yeah, yeah. I know that's cheap. I know that's. I'm like, how is flooring cheaper than painting, right? Like I just
Yeah, that don't make any sense at all.
right.
Um,
So yeah.
No, this is really cool, man. I think we have uncovered so much value in this less than an hour conversation with you, Andre, where we talked about some of the deals, where to look in St. Louis, how what markets to kind of go afterwards, how you built your team. This is all in all a very well-rounded conversation that we covered all these different aspects, and I think the audience will take away so much from a conversation. Tell us what you're working on next, man. Like, it seems like you got a $1.7 million portfolio. What's next for you, man?
Yeah, so what I'm doing now is I'm fully focusing on that burr strategy where buying properties doing a 15 to 20K reno and then refinancing it. Right. I'm taking home $400, $500 a month cash flow, but profiting around 20K per property. Right. So that's what I'm focused on now doing. And let me tell you why. When I first got started, I had my 3 properties a year ago when I spoke to you. Everything is great. I'm cash flowing my 500 a month. Great. But if I had one major thing happen, I don't have cash flow for an entire month. And that just
Mm.
so what that would do is that would mean, oh, now I got to go 2 years on this property just to make my money back, right? And so the way I looked at it was, how can I make money instantly while also getting that cash flow? And that's why now I've got this credit line that allows me to buy quickly, rehab it, and then refinance it right after. So how did I hit? Now I've got 16 properties, so now I'm cash flowing consistently every month. But if I only had if I'm somebody that's starting out, right? They only got 2 or 3 or 4 properties. One major thing goes out, and like you don't have cash flow or cash, that's not a great feeling. Now, luckily, when I got started, I had capital, so I could afford it. I also had my job, right? So, it wasn't the end of the world, but I do want this to be a sustainable standalone business. And so the way I thought about it is like, how can I get money right away so that if something happened, I'm still positive? Like, because if you're getting a property and you're just hoping it cash flows for the year, you have to understand like something will go wrong. Right. So that's what I would tell people. But now when you scale and get bigger, now you're just, even if something major goes wrong, you're still making cash.
Yeah, I think that's so important for people to think about. Like, that's why a W-2 job is so important. It's like you can afford to make some mistakes and
Yes.
learn at the same time while continuing to grow. Just learn from Andre's example and don't be in such a rush. Just take the time, and real estate is just a long game, right? You have to take your time to learn about everything that might go wrong. And that really allows you to present yourself in a better light to potential future partners.
Yes.
Um, Andre, you told me about a course you're starting
Yes.
to
So now
make.
that I'm
What
doing
is that
that,
all about?
yes, now that I'm doing that, so everything I talked to you about here, I'm actually going to go over my process in my course called Section 8 in 8 minutes. And essentially, I'm going to walk you through how to do exactly what I'm doing very quickly. I also have a book coming out as well. So title to be determined, but it will be a play on the Section 8 in 8 minutes. And I'm just looking at coaching and teaching people more about these types of things, about real estate investing. And eventually, I do see myself, being able to retire from my, from my W-2 job. I would say no more than a year, but I'm looking to try to get this done in the next 6 months or so. But no more than a year. And so yeah, and I want to just do coaching, helping. I remember, I don't know if I'd ever told you, but my life goal is, to just be a volunteer basketball coach, and if I have kids someday,
That is so
be their
cool.
coach, right? So how do I get there? By setting up a passive business, right? And then, so scaling it and being able to work in my business. And yeah, so that's what's next for me. Course coming certainly by the end of this year. It's called Section 8 in 8 minutes. You can follow the Instagram, the TikTok, and the Twitter, Section 8 in 8 minutes.
Got it.
And so that's what I've got going on.
Well, I'll definitely make sure I link to your Instagram, your socials, and then when the time comes, I'm happy to update the show notes for you for your course. I love the value that you were to provide today. I got one more question for you. This is a question I've been asking every single guest that has come on to the podcast. Andre, why do you think affordable housing, particularly the lack of supply, is just so hard to solve for?
You know what? I actually think it's easy to solve for, but it really comes down to state and local legislation.
Mm,
I actually think it would be relatively easy to get it done. But they allow, the Black Rocks, the Vanguards, to buy homes that people are not going to live in. They just want to, rent, right? Like, it's going to need to get up to the local and state legislatures to really fix this. But I think it's actually pretty simple to fix.
Whoa, this is an interesting perspective because
Yeah,
I think it's as easy as the conversations go, right?
yeah,
It's like, hey, if everybody's in agreement and everything went the right way and everybody doesn't fight about different ideological perspectives and just want to truly help people,
yeah.
we might actually solve this.
Yeah, but to solve it in its current, I don't see how they solve this without some sort of government intervention. Like maybe you have a 0% interest rate if you're living in the home, and then investors have
Mm.
to pay. Yeah, I don't know. They've got to come up with something, but I think it wouldn't be the hardest thing. Obviously in California, you're in California, but they've put a limit on how much new housing can be built, right? And multifamily things like. I mean, so I think it's out of our control. It's really just going to come up to state and local legislatures. So
No,
that's my opinion.
that's a great perspective, man. And that's why I'm collecting all these opinions from
Yeah.
everybody. This is going to be really cool once I kind of consolidate everything. Andre, so you talked about your social media. Where can people get in touch with you? Is that the best way to kind of DM you and message you and stuff like that?
That is the best way. Also, I didn't plug this, but there was an article that was released on me from CEO Weekly this week.
Awesome.
I think I texted it to you, but yeah, if you want to link that as well, it talks about my journey a little bit more in depth, and how I got here, right? But in terms of linking with me, yes, DM me on social media. That is the best way, and the course will be out pretty soon.
Got it. All right. Awesome. Well, Andre, this has been a pleasure. Thank you for sharing all the secrets for the St. Louis market, especially on how to succeed as a Section 8 investor in that market. So we really appreciate it. Hopefully we'll have you back on again in another year, and let's see how much even more growth is going to come your way.
Yep.
I'm super excited, and thank you so much, man. Really appreciate it.
Appreciate it. Thank you, Ken.
All right. And we're out.